Hey YouTube, my name is Bowen from Pure Investments, and today we're going to be talking about trading and, of course, time frames, as you knew by the title. But today we're both going to be talking about time frames and why I use the ones I do and which ones I use and when I use them. If you like this video at all, please give a like down below. If you have any comments or questions, leave them in the comments below. And without further ado, let's jump right into looking at this random chart I have pulled up, which is Tron. I pulled up a chart I hadn't drawn on for a while. Tron made me some nice gains when we captured this run up. Was for some nice, I forget, was it 40% or so gains? 100%. Oh, I sold out here. That's what it was. So I only made double. But still, I remember trading Tron, and I haven't looked at my graph since. So we're back here and looking at currently the daily time frame. Daily and weekly are the two time frames I use if I'm looking for longer analysis. Weekly, I pretty much don't use on any cryptocurrency besides Bitcoin or Ethereum. And when I do look at Bitcoin or Ethereum on the weekly, here's actually pull up a graph. So when I do look at it on the weekly, it's just to look at overall trends rather than do most technical analysis. Because when I look at it on the weekly, you're not going to see that much time because crypto is so new. If you go to one of the exchanges that actually has posted for a while, I'm trying to look at one of my ones that doesn't have my premium only technical analysis, which you can find out in our premium Discord. Down in the description below, you can check it out. And this one doesn't have any technical analysis. But really, on the weekly, you can tell general trends and you can do some technical analysis in longer time frames. But only on Bitcoin and on Ethereum. You really can't do it past that simply because, if you do it past that, wow, what a spike. If you do it past that, you're just going to not be able to see anything. It's just going to look like one big fat candle. So going back to Tron, just because that's one I had pulled up, if I looked at it on the weekly, I really wouldn't see much besides it looks kind of like it spiked, went down, and then is having a weird flag now. And, your indicators really don't read too well. So I look at daily when I'm looking at, generally, if I'm looking at long-term or medium-term technical analysis. I like to just look at it on the daily so that I can see overall trends, but also see some details about the trend. So, for example, this candle right here, this is kind of a top, but as you can see, it doesn't really reach it till about here. This is kind of another support line. And I could then, look at this general area, and I could draw some kind of a line right there. So, if I just wanted to get a general kind of overview. But if I'm looking more in the medium term, I prefer, so daily and weekly I talk about, but I really like the 4 hour, the 2 hour, and the 1 hour. Why don't I use the 3 hour? Because I don't use the 3 hour. I honestly don't know many other people who do. 4 hours, really great if you're looking for medium term trades, or if you're looking to kind of dice in those short term trades. If you're, sorry, not Dyson, but if you're trying to look at them in a more general trend, indicators are always more accurate on longer time frames and more better to watch. So, if I was looking on the daily here, I just have RSI and stochastic RSI pulled up, although I would like to get, let's see. There we go. This is just, I like this graph because it is the same as stochastic, except it has the crossover alerts right there for you. But if I was looking in the longer time frame, I would say, well, it looks like Tron is about to be oversold. We can see last time I was oversold right here. Oh, of course, that gets right in the way. Bang. Last time I was getting to that 75 range. You can see it dropped right after then. RSI was also pretty high. Last time stochastic was high as well. We can see it had a drop, and the time before that it had a drop. Stochastic is a good indicator for Tron. Whoops. Sorry, I guess TradingView is not liking my computer today. But, we can tell that it isn't always the best indicator, as all of that was oversold for Tron. So that's when you use stuff like RSI, although RSI only got topped out at the very top at 85. But if I was looking at here, I'd say we're going upwards, although this is not at all a finished line. We could still reach, 80 before reversal. And as seen by this right here, sorry for moving my computer, as we can see by this run-up right here, it isn't always the best reader, which is why I then jump into the 4 hour time frame. 4 hours good to, again, dial in that indicators and to look at it more precisely. So we can kind of see, we can kind of see right here right here during this run-up. Remember that run-up where the stochastic RSI was maxed out the whole time. There we go. We can see right here, this is where it topped out. This is actually where it said, oh, oversold. And then as we saw sideways movement, you can see we saw the stochastic RSI drop down right like this. So I would have watched this on the 4 hour and said, oh, well, if we see sideways movement, we're seeing this. That's divergence, and we're going to see some upwards movement, which we indeed did see. Again, for this top right here, we had a top right here, which was the exact top, actually, and we had a top right here. I'm saying top isn't anything that goes over 75 because that's the stochastic RSI kind of limit area right here, 75, 80, anywhere in that range. This is sort of the oversold, overbought area. And so if we look at this on the 4 hour time frame, we can really see this is a pretty accurate reading of Tron. And another good way to look at it is you really want to make sure that whatever cryptocurrency you're watching, the time frame is good for that particular cryptocurrency. So 4 hours seems to be pretty accurate for Tron in these specific instances I've outlined here. Let's try the inverse. When it's bottomed out right here, we can see there's a bottom right here, right? Right here. Yep. Circled. And there was a double bottom right here. So again, stochastic RSI in the 4 hour for Tron, very, very accurate, leading to some really helpful buys and sells. There's another bottom. Wow, yeah, these are great. And I'm literally just drawing up the bottoms from down here up top. So again, here's a bottom down in the stochastic. Boom, there it is. And this one was the first inaccurate one we saw. And if you did buy at the bottom of the wicks, it would have gone some games, but that would have been the best one. And this is, again, when it's good to use different time frames. So jumping into our 2 hour time frame, we could have double checked on this one because I want to see could this one have been right. And indeed, it did say it was bottomed out here, but you can also see it said it was topped out right afterwards. So as long as you're listening to that, that's great. You have to make sure to listen to it. If you're looking for very short-term trades or scalps, though, I always do 1 hour as my long time frame base, so my technical indicator base, if you're just trying to do short-term trades. 1 hour, 30-minute, 15-minute. Those are my keys. So right here, I would say, oh, all right, if it was a few minutes ago, I would say, look, it was a flag, right, like this, with sort of support right here. And by the way, this video is being posted at a later date, so if you're wondering why does Tron's graph not look like this and why is the value not here, that's why. I'm recording this for a later date. But I would have said this looks like it's kind of forming support right here, so it could break up or down. And I would have said, look, there was a bottom right here, and then it spiked up a bunch. We had to rise a little bit, spike back down. And I would have said because it's low, I'm going to guess it could go up. And indeed, it did break upwards. But now we're seeing it up, and we're also seeing it kind of break out of that stochastic RSI, so it's a very high value. Let's look what it is in the 4 hour, just to, again, kind of get a gauge of it. It's dipped down, so we can see it's gone up here, which caused a spike, but even after it rose, it's now dipped down. That's a bullish sign. I want to head over to the 30-minute now to look at it on that way. Again, this is how I like to do it. And if you're doing, short-term scalping trades, you can also kind of get your get a moving average. Boom. Let's get 20 day. 20 is always a good moving average. See if that supports it. Yeah, so then we can also watch the 20. Oh, it looks like a 30-day would be better in this instance. I say 30-day just because it'll probably touch the bottoms a little bit better. Nice, yeah. So we can see in the 30-day right here, we had it touch and then rise up, and we had it touch and ride for this long period of time before it broke through, touchdown. You can see there's a 3-bar indecision point on the 30-day. Touched this top line, indecision again, and then broke through, and it's looking like it's now kind of guiding on the 30-day again. So, or 30-day moving average. So, what time frames do I use? My main ones, just to cover, again, 30, 15, and 1 hour for short term. We can look on this in the 15-minute as well. If you're looking for really just for scalping, then, oftentimes stochastic RSI on the 15-minute time frame, you can see stochastic RSI was bottomed for this entire time period, and indeed it was bottomed for this only to here. this bit right here. And, you know, if you'd entered at the very beginning of when it entered below the 20, which would be right about here, you could make a potential 3% returns. Or if you buy at the very bottom, which, you know, you would have been very lucky to do, it would have been 5% returns. The only thing about that is on the 5-minute, on the 15-minute, it is a lot less reliable. So, you know, if it's going upwards, in general, it's going to be good. But, you know, going back to a more bearish period, you can also see a lot more flatlining on the 15-minute. Getting around the 15-minute is actually difficult. But, for example, right here, this is a great example of where the stochastic RSI may not be as helpful. For example, it's bottomed right here, but you notice it continues to just be bottomed until here. So if you'd bought in any of this range, you know, you're not going to be making profits. That's going to end up being loss, which is again why, because again, bottom, we can then look at it on a longer time frame. So even if you were scalping at this point, you said, it looks like it's bottomed. It looks like the RSI is decreasing, even while the valuation is going sideways here. This probably looks good. I'd go to the 30-minute before I make any decisions. Whoa, where are we? I have to find where we are first. But I go to the 30-minute before I make any firm decisions. You know, go to the 30-minute, go to the 1 hour, and try and use that to help me make up my mind, rather than just going off of one time frame. So that's something I never do. Is I never just go off of one time frame and say this is the absolute, this is the way I want to do it. There it is. I had to locate it. So on the 30-minute, we can see it was also bottomed out. And again, this is why I'm saying use lots of different time frames, not just one. So in the 30 minutes also bottomed out, but the difference is here, it was bottomed out for a long time period right here. So this entire part was bottomed out. But again, if you'd entered at any of this point, unless you'd gotten this little spike here, but you know, that's pretty bad because it started up here, so you still would have been lost. You know, it's essentially going down right there, so it's not lost. And again, if I was there, I would check the 1 hour. So this is what I'm kind of saying. If this is a short-term trade, I really would zoom it all the way out. And right here, we can see again, wow, it's bottomed. But now we can at least see that it stayed bottomed for a while. So right as it entered it, which was again right here this time, so I'm actually just going to draw a vertical line right there. It stayed bottomed until right here when it had a fake out and then went back to being bottomed right here and continued until right here. So during these time periods, it still is going down. This is still a bear period, which is why I always say trust your longer time frames more. Because let's go back to where we just were. I keep losing it. There it is. You know, we've been circling this entire zone, but you can see during this actual time period, if you're looking at a longer time frame, always trust longer time frames. We were maxed out this entire time, and until this point where it got to a low dip, this is where I would have trusted entering, right here. And if you look at this actual entry point right here, that actually is a fantastic entry point because you would hit a maximum of 2% gains going all the way down to a 1% loss, and now you'd be at 12% gains. So overall, it would have worked out better. So as a brief overview of what I just covered, longer time frames are always better if you're going to be looking at indicators or oscillators. Always trust them, always, more than shorter time frames because they will be more accurate. Even looking at Bitcoin on a weekly chart, if you were smart enough, and there weren't that many who were, but if you're looking at Bitcoin on a weekly chart, you could have predicted the crash it has had lately, just based off of this right here. You know, we had rising highs, and eventually the low had to come. In addition to that, so check your longer time frames. Shorter time frames are better for scalping and short-term movements, but with them, use in conjunction your longer time frames and those indicators and those oscillators to predict the movement in a more accurate manner. If you enjoyed this video, please leave a like and a thumbs up. I appreciate it. Leave a comment below if you have anything to say, and have a great day, guys.